British Airways Concorde generated up to £50 million in profit in a single year from an aircraft with 100 seats, burning 4 times the fuel per passenger of a Boeing 747 and charging $6,000 for a one-way ticket. 18 airlines placed options to buy it. Only 2 ever flew it. The economics of owning a Concorde were never supposed to add up. For a brief window they did, and then everything unraveled. British Airways Concorde operation stands out for the sheer scale of its financial paradox. In peak years, the aircraft brought in annual profits as high as £30 million to £50 million, despite carrying only about 100 passengers per flight, 1/4 the capacity of a Boeing 747 on the same transatlantic route. Over Concorde's 27-year commercial life, British Airways books recorded a cumulative £1.75 billion in revenue against roughly £1 billion in direct operating costs, yielding a net contribution of around £750 million. These numbers, drawn from British Airways' internal finance records and cited by former program managers, anchor the claim that Concorde was, for a time, one of the airline's most lucrative prestige products. Yet these headline figures mask a deeper imbalance. Each Concorde flight consumed 4 times as much fuel per passenger as a 747, and the economics relied on filling every seat at a ticket price that hovered near $6,000 one way, in dollars of the early 2000s. The aircraft's limited network, constrained by international bans on supersonic overland flight, meant that revenue potential was capped even before external shocks or cost overruns entered the equation. British Airways' finance team, in interviews and archival testimony, described the Concorde as a high-margin, low-volume product. Operating costs were steep, but the brand's allure allowed British Airways to command fares far above any subsonic rival. The numbers tell a story of peaks and valleys, years of windfall profit when demand and fuel prices aligned, offset by periods where even full flights could not overcome the aircraft's structural cost base. The result was a balance sheet that, on the surface, sparkled with success, while the underlying economics remained fundamentally unsustainable for any operator lacking British Airways' unique market, regulatory, and political circumstances. In the years following Concorde's dazzling debut, the numbers behind its commercial future began to unravel. The initial order book counted 74 options from 18 airlines, a worldwide vote of confidence. But as the oil crisis of 1973 sent fuel prices soaring, that optimism vanished almost overnight. Concorde's fuel burn per passenger was 4 times higher than a Boeing 747, and every spike in oil prices hit the business case with full force. Airlines that had once lined up for supersonic prestige now faced a reality where each seat required a ticket price near $6,000 just to break even, a figure far beyond the reach of most travelers, even in the lucrative transatlantic market. Pan Am, the launch customer in the United States, canceled its Concorde order in early 1973, citing operating costs that simply could not be justified. Their withdrawal sent a signal across the industry. The rest of the order book soon collapsed, leaving only British Airways and Air France, both under direct government pressure, to take delivery. The production run that was supposed to reach 150 aircraft stalled at just 14, a fraction of what was needed to spread development costs and achieve sustainable economics. The collapse of demand was not just about oil prices or ticket costs. The regulatory environment compounded the problem, with sonic boom restrictions closing off lucrative overland routes. The result was a shrinking addressable market, one where Concorde's economics could only work in a narrow, high-fare niche. The prestige of flying supersonic remained, but the dream of mass-market adoption evaporated as quickly as the fuel in Concorde's afterburners. Regulatory limits shaped every aspect of Concorde's economics. When the U.S. Federal Aviation Administration and other global regulators imposed bans on commercial supersonic flight over land, starting with the United States in 1968, followed by France and the UK in the early 1970s, the aircraft's potential network shrank to a handful of ocean-spanning routes. This restriction was not just an inconvenience. It locked Concorde out of high-density corridors where its speed advantage might have attracted a broader premium market. The business case, originally built on a global web of routes, now rested almost entirely on the transatlantic crossing between London or Paris and New York. At the same time, The collapse of the order book had a compounding effect. The original economic plan called for 150 aircraft in commercial service, a number that would have spread the enormous development and tooling costs across dozens of operators. Instead, only 14 production Concordes ever entered airline service. Each airframe now carried a fixed cost burden nearly 10 times higher than the designers had intended. Amortization, which should have been manageable at scale, became a crushing overhead for British Airways and Air France. Every flight had to shoulder not just its own fuel and crew, but a disproportionate share of the program's sunk investment. This mismatch between planned and actual production left Concorde with a structural disadvantage. While a Boeing 747 could be produced and sold in the hundreds, driving down per unit costs and giving airlines flexibility to deploy aircraft wherever demand justified it, Concorde's tiny fleet size locked operators into a rigid high-stakes game. The result was that even when ticket prices soared and flights were full, the revenue ceiling imposed by regulation and underproduction meant that Concorde's cost spiral was never far from the surface. The aircraft's economics became a balancing act, one where every external shock, from fuel prices to policy changes, threatened to tip the scales. Maintenance costs for Concorde surged relentlessly as the fleet aged. Air France's internal records show a 72% increase in maintenance spending over the decade leading up to retirement. Parts scarcity, dwindling pools of trained engineers, and the need for custom tooling turned every heavy check into a budgetary event. An Air France maintenance executive later described the situation bluntly, saying the older the airframe, the more bespoke the parts, the steeper the labor bill. That's the engine of the 72% surge. This mounting pressure collided with external shocks that the business model could not absorb. On July 25, 2000, Air France Flight 4590 crashed on takeoff from Charles de Gaulle, killing all 109 people on board and 4 on the ground. The disaster triggered an immediate spike in insurance premiums and a collapse in passenger confidence. Both Air France and British Airways suspended operations for months, and when flights resumed, demand never fully recovered. Regulators soon imposed new safety requirements, including reinforced cockpit doors in the wake of the September 11th attacks. For Concorde, the retrofit cost reached £300,000 per aircraft, more than 10 times the cost for a typical subsonic jet. Each new mandate tipped the balance further out of reach. In 1984, the UK government had sold the Concorde fleet to British Airways for £16.5 million, a sum that barely covered the value of spare parts. By 2003, the economics were irretrievable. Air France announced its exit first, citing the unsustainable cost spiral. British Airways followed months later, closing the book on commercial supersonic travel. The final years laid bare the contradiction at the heart of Concorde, a product that thrived as a symbol of national achievement, but could not survive the harsh arithmetic of airline economics. Boom Supersonic's Overture project aims to rewrite the economics of high-speed flight. The manufacturer's published specifications call for a cruising speed of Mach 1.7 and a cabin designed for 65 to 88 passengers, positioning Overture between Concorde's capacity and that of a modern single-aisle jet. The company targets entry into service in 2029, with claims of improved fuel efficiency, lower emissions, and a ticket price that could range from $10,000 to $25,000 for premium routes. Unlike Concorde's narrow transatlantic niche, Overture is pitched as a tool for opening hundreds of city pairs, thanks to anticipated regulatory changes and quieter, low-boom design. As one aviation economist points out, the real test will be whether Boom can deliver on these numbers at scale, or if the program will encounter the same structural cost barriers that limited Concorde's commercial reach. 3 economic yardsticks define the future of supersonic travel. First, ticket pricing remains the gatekeeper. Concorde required fares near $6,000 one way in 2003. Boom Overture projects a range of $10,000 to $25,000 for premium routes. That fare band reflects the same reality. Only a small segment of travelers will ever pay for speed at this scale. Second, regulatory constraints shape the entire market. The Federal Aviation Administration's 2025 decision to allow overland supersonic flight, if noise standards are met, creates a policy window, but the technical bar remains high. Third, the Concorde story offers three lessons: the need for true economies of scale, the risk of over-reliance on prestige pricing, and the importance of transparent accounting that includes full development costs. The unresolved question is whether any new project can overcome these barriers, or if the economics of speed will always remain out of reach for most airlines. Today's supersonic ambitions still face the same arithmetic: limited seats, fuel costs quadruple those of subsonic jets, and a business case dependent on exclusivity. Concorde's paradox endures as a warning. Prestige can drive short-term profit, but it rarely solves the challenge of making speed economically sustainable. Thanks for watching.